Welcome back to Portfolio, everyone. And in this video, we're going to do a stock battle between Apple and Microsoft. Every single Saturday, we do a stock battle between two companies that operate within the same sector of the market. So in this video, we're going to compare the two tech giants, Apple and Microsoft, and see which one may be more attractive at its current price point. We're going to take a comparison of some key financial metrics, evaluate the company's performance, and determine which one we like more. But of course, these are the two largest companies on the S&P 500. Apple is the first ever US company to reach that $2 trillion market cap. These are both beasts. These are companies that will continue to operate for long to the future, and I do believe they can both be part of a nice, conservative, and fast-growing portfolio. These companies are not super risky. Of course, the tech sector is at an all-time high right now, but these are companies where their financial statements are very strong. They have that brand loyalty where I believe they will continue to operate, grow, and innovate over the next 5, 10 plus years. So we're going to do a direct comparison today between Apple and Microsoft. Usually we like to compare companies who operate and actually provide the same exact services to consumers, but these companies have some overlapping services or products, but they do vary some little bit. But overall, these are companies within the same sector. They're the two largest tech companies in the world, and we're still going to evaluate them today and compare some key financial metrics. First thing we're going to take a look at is their just 12 months price performance to see how they've been performing during this economic slowdown. If we take a look at Apple, they are up 143% over the past 12 months, trading just shy of $500 a share. On the 52-week range, you can see they're being traded very close to their all-time high, and they have been surging. They saw a slight decline in the month of March, have fully recovered, and continue to grow way past that pre-pandemic level. And this is a company that's actually been benefiting from the economic slowdown and people staying at home more often. Microsoft is another company that is actually benefiting from this stay-at-home economy because of the different cloud products and services they offer. Currently being traded at $228 a share, once again, very close to their all-time high. Up 67% over the past 12 months, both of these companies have seen massive growth during a period of time when a lot of businesses are actually going bankrupt. So in this video, we're going to do a direct comparison between these two companies. And as you know, I am the Gen Z investor, and every single day on this channel, we talk about different stocks you can buy, overall stock market performance, and any other big stock market news and headlines. So please like and subscribe, and we're going to get right into today's battle. First thing we always compare is their historical 5-year performance to see the return they provided to investors over the previous 5 years. We're going to start with Apple, who has a total return over the past 5 years at 394%, beating the overall market, which has returned only 73% to investors. So Apple has a very close to 400% total return in a matter of 5 years, which is absolutely incredible to even think about. If we take a look at Microsoft, their total return, including dividend reinvestment, over the past 5 years is 491%. So they outbeaten Apple by 97% growth over the last 5 years, and once again, they have destroyed the overall market, which has only returned 73%. Of course, no one is complaining of getting Apple's just shy of 400% return or Microsoft's 500% return. Holding either of these for the past 5 years has been very, very rewarding to investors, but it is nice to point out that Microsoft so far takes the first kind of little quick point that they have outperformed Apple over the past 5 years. But we cannot go back in time. We are investing now for the future. So we're going to take a look at their key financial metrics that may determine which one, might have a little bit more success going forward. So we're going to jump right into the doc. You can see here, the first battle we have is market cap. This one doesn't really determine which one may be the better buy, but this is just a nice to show you comparison between company sizes. These are the two largest companies on the S&P 500. Apple comes in with the win in this first battle. Of course, they do have a market cap over $2 trillion, currently sitting at market close at $2.14 trillion. That is much more than Microsoft's $1.71 trillion, but of course, these companies are extremely, extremely large. Number 1 and number 2 on the S&P 500, and combined, they make up more than 10% of the S&P 500's weight. Second battle we have to take into consideration is with regard to the income statement. We're going to take a look at some key income statement numbers because, of course, we like investing in companies who generate a lot of revenue, keep a lot of net income, because, of course, they can use that net income to grow, expand the business, and also return capital to shareholders as a dividend. So if we take a look with regard to revenue, Apple brings in more revenue at $273.9 billion in the past 12 months, compared to Microsoft's $143 billion. So of course, Apple is the larger company, so we do have to keep that in mind when comparing directly revenue. We have some other metrics that will compare them on an equal playing field. So even though Apple is a larger company and it is expected that they will bring in more revenue, a couple other battles down below compare these companies in a much more fair way. But we do have to just throw it up there because it is an important thing to take a look at. So Apple has generated more revenue at $273 billion over the past 12 months compared to Microsoft's $143 billion. But overall, these numbers are both insane. These companies generate tons of revenue each and every month and each and every year, and I believe that will continue to grow over years to come. Next, we take a look at the bottom line. Revenue is the top line of the income statement. We have to take a look at net income, profit, which is the bottom line. So of course, it's nice to see companies generate a lot of revenue, but if they aren't making any net income, then it doesn't really matter. So both of these companies are extremely profitable. Apple brought in $58.4 billion of profit over the past 12 months compared to Microsoft's $44.3 billion. So Apple wins this battle once again. They have generated more profit, but they also generated much more revenue. So now to make this a little bit fairer, we're going to compare profit margin. So for every dollar of revenue, how much money are we keeping as net income for ourselves in the business? So Microsoft has a much higher profit margin over the past year with a profit margin just shy of 31% compared to Apple's 21.32%. So Microsoft gets its first win on the board. They have a much higher profit margin. And of course, this is a better way to compare these two companies because once Microsoft grows and reaches that same revenue point as Apple at some point in the future, Microsoft will be generating more profit if they can maintain these high profit margins. But overall, these companies operate in an industry where these high profit margins are sustainable over the long term. Of course, there are other industries in the market where we see profit margins below 10% for net income. Moving on, we have to take a look at how fast revenue is growing. It's great to see that Apple is generating more revenue at its current point in time, but which company is growing that revenue faster year over year? Which one's expanding and bringing in more dollars into the business? Microsoft has outperformed Apple, bringing in revenue growth averaged over the past 3 years, just shy of 14%, which compared to Apple only 6.72% revenue growth over the past 3 years is nothing too exciting. Of course, Apple is a beast. They are the largest company, so they are a cash cow company, so we should expect, slower growing revenue year over year, but they still operate in the tech sector, so we still like to see them try to hit that double-digit revenue growth rate. They haven't done that over the past 3-year average. Microsoft continues to impress, high profit margins and high revenue growth each and every year over the past 3 years. Next is the PE ratio. So if we're going to buy today, this is the forward PE ratio, which you can get from Seeking Alpha. So this PE ratio shows how much you are willing to pay per dollar of company earnings, and the lower PE ratio essentially means which one might be cheaper compared to the other. So Apple comes in at a forward PE of 38.7 compared to Microsoft's 35.1 PE ratio. So Microsoft does have the lower PE ratio here, and they win this battle. So far we're tied 3-3, moving on, past the income statement. Next ratio we have to compare is the price to sales ratio. The lower of this ratio wins again. So Apple has a PS ratio of 8 compared to Microsoft's 12. So Apple wins this battle. Now we have to get something a little more interesting, and what dividend growth investors may find more attractive is, of course, dividend yield. So both of these companies have seen rapid share price appreciation. So in regard to how fast their shares are growing, the dividend is just like a small added bonus. Apple's current yield is only 0.66% compared to Microsoft's 0.9%. So higher yield wins. Microsoft is providing a higher dividend return to investors if you were to buy in right now. But overall, these companies, of course, are dividend growth stocks. So they are low yield, high share price appreciation, and they do a very nice job of growing their dividend at a fast rate each and every year. And if we take a look at that dividend growth rate, their 5-year dividend growth rate for these companies, rounded to 1 decimal place, they are actually tied. Over the past 5 years, both of these companies have an average 5-year dividend growth rate of 10.5%, so they both get a point for this battle. It is very interesting when doing this research is that these companies have been growing their dividend at a very, very similar rate. Honestly, when you round to 1 single decimal point, their 5-year dividend growth rates are identical, and a double-digit dividend growth rate is amazing to see. Continuing on with dividends, how safe is the dividend? Both of these companies have the highest dividend safety rating possible from Simply Safe Dividends, ranking in at 99. So these are companies where it is extremely unlikely that they cut their dividend anytime soon. Of course, these companies are the two largest, some of the best businesses in the world. It is very common and not really surprising that they have this high dividend safety score. And if we take a look at their earnings per share payout ratio, very low sustainable payout ratios for both companies. Apple has a payout ratio from earnings at 25.4% compared to Microsoft, who has a 31.6% earnings per share payout ratio. So Apple wins this battle. They do have the lower payout ratio, but for both companies, these are both extremely sustainable, a lot of room to reinvest back into the business, and a lot of room to grow that dividend from that 10% average dividend growth rate over the next 5, 10 plus years. These companies are beasts. We all know that. We all know these companies have continued to outperform the market. I believe they will continue to grow and outpace the market for years to come. And overall, these are two companies that can be a nice addition to really anyone's portfolio. And even if you're just the type of investor who buys a low-cost index fund, 10% of your money, at least if you're buying an S&P 500 index fund, will be going into Apple and Microsoft. Next is the balance sheet metrics. We got to compare the balance sheet. We took a look at the income statement. We took a look at the dividend. Now let's compare the balance sheet to see which one, has a current better financial position. So the current ratio is a company total current assets compared to their total current liabilities. And in this, we like to have a higher current ratio. We like to maintain companies who have a current ratio of at least 1.5 or higher. Apple comes in at 1.47 current ratio compared to Microsoft's 2.52. So Microsoft wins this battle. They have the higher current ratio, so they will have an easier time paying off their short-term liabilities with the total current assets they have on hand at its current point in time. Last battle we have to take a look at is debt to equity ratio. And in this, we want to have a lower debt to equity ratio wins. So Apple's DE ratio comes in at 1.69 compared to Microsoft, which is only at 0.69. So Microsoft has the more attractive DE ratio at its current point in time, and they actually win both balance sheet battles. So if we do an overall comparison to see which company wins this overall battle, you can see here that Apple won 7 battles and Microsoft has won 8. So Microsoft wins this stock battle 8-7, a very, very close battle. In 2 categories, the companies actually did have a tie, and overall, these companies have been performing extremely well over the past 12 months and over the past 5+ years. These are some of the largest companies ever. These companies, I believe, will continue to grow and hit new milestones over the next 3 to 5 years, and I do believe these companies can both be a solid addition to your portfolio. So thank you for watching, everyone. Microsoft did win this Saturday stock battle. If you have any ideas of 2 companies you want to see compared in a battle, please leave them down below, and we will compare them in next week's stock battle. So thank you for watching, everyone, and I'll see you in tomorrow's video.